What's up, guys? Today we're going to be going over exits, take profits, trailing stops, and entries. Basically, everything a trade consists of. So first things first, I don't really want to rush this. I don't really want to rush this video because this is a very important one, and I want to make sure I get my points across and you guys understand exactly what I'm talking about, because this is what you guys are gonna be entering off of and placing your stops and etc. Just how to manage a trade. And this is where you're gonna be putting money at risk at one point. So I want to be making sure I get exactly what I'm doing here across to you guys. So I'm gonna take my time and hopefully you guys understand. It's gonna be fairly simple. We'll start off with the entries. So as you guys know, for the entries, I use a fair value gap, which is this right here, the gap in price with where there's no risks overlapping. You guys could use other stuff like an order block or a volume imbalance. When price closes above the change in state, so you guys could the change in state for example would be this, or you could use a higher time frame, or you could use a higher probability change in state, which would be this. So if you would use this one, you'd enter there. If you would use this one, you would enter at this candlestick's close right there. But I don't trade off of that. That's quite an aggressive entry, and you don't wait for a pullback, so sometimes it could mess up the RR, but you will be getting in most trades. Sometimes I do miss trades, but the RR is quite good. And if you were to enter here, it would have been pretty much the same, but here for this change in state, then it would have been a bit worse, but nonetheless, you would have won. So, but yeah, so the entries, you'd be using a fair value gap in price like this, or you could be using an order block like this, for example, which wouldn't have not gotten hits. You could also go on a higher time frame. So the order block would be this right here. Let's see if that got hits. Yep, so close below and then trade it back right into it right here, pretty much the same entry. So that order block would have been pretty nice too to enter in on. So yeah, the entries here. So basically what I wait for is the fair value gap to form, the change in state right here. So I'll mark that out for you guys, just in case you guys are visual learners. I got you. Change in state of delivery. We got that, close below. Now we got the fair value gap formed. So right at this stick, I'll just play it out for you guys so we could do the exits. I'll tell you guys why I put my stop here and where I would trail my stop loss and my take profits. So I'll literally put back price here. So basically what I'm waiting for is time. There's a specific time that I like to take trades in, and it's not this teaching or this concept kind of isn't for this mentorship, but I'll throw it out there. It's from here to here, and it's a macro that's where price actually like triggers into a inefficiency and will target a raise at a higher speed or whatever. It's just like a macro where the algorithm will spool up more and target sell side or buy side, depending on what is the overall target for the session. So as I'm watching price here, we took out this high, and I want to check, did we get sort of S&T to make it higher probability? No, we did not. So right here, I see that a potential fair value gap could be forming since we have such a big candlestick, and it's, as you can see, there is a lot of volume, so it's a high probability fair value gap, and it clearly tells us that we want to go down because the change in state is all the way here and we close way below it. So let's play that forward. We get the next candle form, and right there I get triggered in. And now for the stop loss placement. Where would I place my stop loss? As you can see right away, I placed it at the high. Why at the high? That's just how I usually play it, because we already took the high right there. So why would we want to take this high again? If we want to take it again, then I'm probably wrong, and we'll probably trigger towards these highs next. So it's like, okay, then I'm gonna place my stop there. But also when you have such a big fair value gap like this one, you could place your stop a bit tighter. And what I usually look for, I usually look for another fair value gap to base that off of. So if I look to my left, there's a BISI right here, but in this case we came below it, so it's an inversion. So I would put it at the high of that. So instead of it being 35 pips, you put it down to 28. And instead of it being, I think it's 4.2, if 4.2 RR, you can make it 5.2. So it's not bad. And that's pretty much my risk if I were to not accept this risk. But I'm pretty sure I would have said 4. 4 is not too bad. So I would definitely keep my stop up there nice and safe. And if it takes me out, then I'm wrong, and I'll adapt and see if we could potentially target this area if price shows me that it wants to head there. So next up, let's pretend I got in here. So let's add positions. Here we go, and this is replay. So this is completely fake, just to remind you. It's pretty obvious, but let's play price here. So for me to trail my stop, I would like to see us come below this fair value gap right there, because we have equal lows below it. So I want to see us displace right below this fair value gap, since we might get some displacement a bit to the upside, and maybe trigger into that fair value gap right there. Let me move this so I can show you guys. I just want to like tell you guys what's going through my mind, like if I were to be in this trade, right? So I see this equal lows, right? I see this fair value gap as well. That could be a target, but I'm not going to target that because it's only a 1-to-1. I'm not going to put my money on that, and I believe that market's going to go down here. Why? Because these are morning lows, and these are morning lows too that got taken out in the morning. But we also have a bunch of more lows down here. So my money is on that morning lows to get taken out, which is actually 10 a.m. lows. So that's pretty nice, pretty high probability target. We have, I believe, correct me if I'm wrong, but I think we came into a daily fair value gap up here. So that makes it even more high probability. But yeah, so let's see if we could come back up into this and then hold this to then come lower. There we go. Now we came below it. I would change this to the inversion color, and I would like to see this hold as resistance. Also, I do have a SIBI in the middle of it, which I'll mark out like this. And right now you can move your stop loss. I'll just use this line. You can move it down to, I would say, this high right there. And this is like being super like lenient with my stop. I'm not like forcing it down. If you want to be a bit more aggressive with your stop, you could move it down to like, I would say just break even, or just above this fair value gap here, because we held it already, so you don't really want to see it come back up to it. So you could definitely put it above that. But if you want to play it safe and calm and collected kind of thing, just leave it up here, right above this high here. Then into this fair value gap, it shouldn't come above that. So that's what I would place my stop, and my risk would be managed quite well right there. So let's continue to play this. See if we hold that fair value gap. Held it quite nicely, and this is where we came to the bottom and held it completely super clean. So I would like to see us displace lower. Once we come below this low, I would trail my stop loss quite a bit. So let's see if we could. There we go. We displaced as soon as this candlestick formed right there. I would absolutely, this is a good sign for me to trail my stop lower. I could trail it down. I would trail it down above this fair value gap. So what I see right now is we held this fair value gap and this larger time frame fair value gap, as well as this one. So this area is completely ran back and forth. So I would like us to, so this is like, I consider this as one PD array, and we have this PD array, and this one. So I'll put it above this one. So I put it up above usually 3 PD arrays. So there's a lot of back and forth here. I'd like to see that stop price and not see price go above that, especially because it's right under this inversion, right? So yeah, let's play that. And there we go. So take profit hit, which was the morning lows. And this wasn't really technically considered morning lows because the morning lows, the morning session starts at 9:30. So, and the morning session low would be right here. So perfect hit, and you'd be completely out. I'd say take profit 1. If you want 3 take profits, which is what I usually do, you would do take profit 1. You want it at least around a 2 RR or at least a 1.8. That's what I would keep it around. So you definitely put it like around there. This low right here, which is a low at 1049. And then the next one you could put at this fair value gap that is unfilled. It's a quite nice target. And then of course leave a runner for the morning lows. And yeah, that's it for that. All right, so for this trade, this was a decent trade right here. We have an SMT. And by decent trade, I didn't mean like I took it. I'm just telling you guys from like, this is a good entry. If you were to take a trade and you see this in live price action, that would be a fantastic model to take off of. And so in this trade, you are targeting the AM highs, not the AM lows. This time it's the AM highs, which is the morning session highs. So from 9:30 to 11, you have the highs and the lows. Right here, we targeted the highs. And well, as you can see, we took it out quite nicely, especially because we're in a bullish trend. So it's quite a high probability trade. So right here, we got the market structure shift. The reason why I didn't wait for the change in state is because it's so far away, and because we did get a retracement back here after coming above this short-term high. So I would have entered there, stopped here. This is quite a big stop loss. So in this case, like I said in the last trade that I showed you guys, you could trail it up if you look to the left and find a fair value gap. So right here we have this one, so you could trail it up to the low right there. So instead of 44 pips, it's 30. So trail it up there. And you could expect price to come down to this fair value gap, but not go below it. If it goes below it, you're most likely wrong, or it's just choppy price action, and it's just unfortunate if you got stopped out. But as you can see, we just hit the constant encroachment of this fair value gap and absolutely bombed up. Came down into this fair value gap here. I'll tell you guys how this trade went, like this, by replaying it. We got displacement above this structure. We got a fair value gap here, as you could see before it came back into it. So I'll mark it out for you guys. There you go. Also taking out a low, so we have a order block. Let's see if we get any reaction at that. Oh yeah, and for trailing stops, we already took out this structure. And for first take profits, I would look to target these equal highs right there for about a 2.9. And for a next target would be there, these equal highs. And then the rest would be at the AM high. So right now I would trail my stop up to around I'll trail my stop up to around, I would say, under this fair value gap, something like that, and see how price wants to react to these highs. The reason why I trail it up kind of like far up is because we did invert this fair value gap here So I would definitely want to see this one hold. And indeed we did. So let's see if we go higher, come into this one, trail this up to, let's say, right here. So we have this PD array. So that's 1, that's 2, and that's 3. So under this one. So now regardless, if you lose and the price comes down on you, you get a 1.3, which is still not bad. But we also did hit take profit 1. Take profit 2 is also hit. So now we're just waiting on take profit 3. And as you guys know, we did take it out. There we go. Super simple. On to the next trade. So for this one here, this was off of I believe a hourly fair value gap. So here, remove that. There's an hourly fair value gap right here that we came into, and we had clear lows that we wanted to target. So also another high probability low that you guys want to be targeting is any time from 7 to 9:30. So from 7 a.m. to the morning open are high probability lows. So you have this low. Actually, no. So you have pretty much like these lows, but they got taken out. So you would look at this low, and this low got taken out right here, super cut and clean, right? At this low was formed at 9:19, so that's between 7 and 9:30. So that's in the parameters, and we still got stopped out, but nonetheless, this would have been a fantastic trade since there was a SMT. So that means that this was a good trade. It's just unfortunate that the US 100 was stronger and pumped above this high, but this was a valid trade, so I would have taken this regardless. We do have a change in state right there. We have the inversion that I would have entered in and stop at the high since it's a rather small stop. Or if you want to tighten it up, there's no other PD array to the left that would allow you to do that. So regardless, I would have taken a loss here. And yeah, so we'll go on to the next trade. So this is a PM trade targeting lows during the lunch hour. So your first take profit could be this fair value gap. Second could be these lows, and then the lunch lows, of course, you could leave it on your 4. So what I see here is we have a market structure shift as well as a change in state of delivery. And well, none of these fair value gaps, well, there's only one, but it didn't get met. So you would pay attention to this inversion. What we wait for is for price to come below it and close below it. And then we see if we can come back into it. As you can see, we did. That's where I would enter. So let's play it out here, and I'll narrate to you guys how I see or what's going on and how I would trail my stop loss. So, and also, of course, stop loss at the highs, it's only 13.5 pips. So that's a fantastic stop loss, getting around a 3.82 RR. So it's quite a nice trade. Now let's play price forward here. I would like to see price come below this low with a little bit of momentum, so then we can trail our stop loss lower. Did get a bit of momentum there, so we also got a close below, so that's enough to trail our stop loss. Let's see where I put it. Put that fair value gap there. Order block. For now, we could just put it at just above this inversion. That's a pretty nice spot. Now let's continue to play this. So we took out this high. I would not expect us to come above this high again. I would like to see us run back below that. Fair value gap, invert it, and take out this low. As soon as we take out this low, I'm putting it above this high. There we go. Took it out with strength, putting it above that high. We also filled this fair value gap, so you could also put it above this as well. The only reason why I'm putting it above this one now might seem a bit aggressive, but we are very close to this low right here, so I want to see price absolutely slam below it. So that's why we're being a bit more aggressive here. If we weren't as close to these lows as we are right now, I would definitely keep my stop loss a little bit more safe up here. See, that's what I mean. Very aggressive to the downside. And that would have been all take profits hit. So we also had SMT on that trade, if I forgot to mention. So keep that in mind. SMTs are an extra confluence. It's not something to take a trade off of. It's really just an extra confluence to the trade, making it more high probability. All right, so next trade we have here is a little bit of a different one. As you can see, I'm not entering at the high of the fair value gap. I'm entering at the consequent encroachment. Why that is because the first take profit that I would take profits at is these highs, right? So let me mark that out. So if I put my take profit there for my first take profit and I enter at the high, the RR wouldn't be there. Like, I wouldn't want to take the trade. 1.3, that's not enough. So for that reason, and because I like this trade so much, because of all the displacement. So we have a displacement here, consolidation, absolute monster displacement above this high, and then a bit of consolidation and a return back into this fair value gap and to this 5-minute order block. I'm like, okay, I love this trade, but I don't like the RR, the risk to reward, right? So I'm going to enter in at a higher probability target in the fair value gap, which is the midpoint of it, also known as the consequent encroachment. So I'd enter there, and basically stop loss will be below this low that created the fair value gap. So, and then, target the same targets. So instead of it being a 1.3, it's a 2. And the rest I would target, there is a gap here. I think it's on a 5 minutes, if I'm not mistaken, right there. So target that as well. And that would be it for that trade. 2.6, not bad. Or if you're probably wondering like, oh, don't you use 3 TPs? Yeah, sometimes I do, but sometimes it just doesn't permit me. The market doesn't show me like 3 spots, like high probability spots that are gonna get targeted. So I just use 2. So for example, for the 2 first highs right here, I would take 2 positions off it, and I would leave 1 runner for the gap, right? That way I can manage my profits right away and then allow a little portion to go for the 2.6. So this is how I would manage the trade. So I would enter right there, also hitting the order block. Let's see if we got a... Yep, so we got a SMT right there, so I'm expecting a lot of volume to come in now. Let's see if we can hold that fair value gap. Didn't even come down into it. So it's a breakaway gap, so let's see a lot of strength to the upside now. There we go. Just absolute monster moves to the upside. When you see gaps left open like this, you could just expect us to drive higher without even like when you see gaps left open like this, just expect price to just drive higher. So right away off the bats, I would have trailed my stop loss after we took out this high, since we are so close to these relative equal highs here. So and plus it's such a monster move, so I definitely put it right below this fair value gap. something like that. Already managing risk. And then consolidation. I'm expecting this fair value gap to hold. We don't even come into it, and then we just drive above. We keep going, and I would just put my stop loss to break even and leave it at that. Really nothing else, nowhere else to put it, except for maybe below the fair value gap, but it doesn't really matter to me. Yeah, I would just keep it at the entry point, so break even if I lose, and I'd be okay with that. So let's move on to the next trade. I think this is the final trade. It is. So this trade, as you can see, we have two SMTs right here, and this is also a afternoon setup. So after 1:30, I start to look for setups, 1:30 p.m. and then Eastern as well. So not Pacific or so Eastern. We traded below here, so the change in state would be up here, so you don't have to wait for another change in state. Of course, there's one here, a higher probability one. We took that out, came back up into the fair value gap that was formed, and ultimately just traded lower. What did we target? We have lunch lows here. So lunch lows got targeted. Lunch lows. And that's the ultimate target that I wanted to leave my runners for. Second take profit could be, we have a random order block right there. So that's your first take profit for about a 1.8. And then second could be this right there for about a 2.4, and leave a runner for the 3.89. This was another simple trade, but what makes it not simple is that you have to wait for all of this noise and then you enter the trade. Also the stop entry, right? Usually I'd put it at the high, but since we continue to break lower in price and structure, so this is the way I look at it. So we get the change in state here, right? So change in state here, if I were to take the trade here, the stop would be above here. Since we broke structure again, if I were to take the trade in here, the stop would be above here. And then we broke structure down again right here, so my stop loss would be above there. And yeah, so how I would have trailed my stop loss, it would have been something like this. So as soon as we took out this low, and see how we inverted this fair value gap right there, we closed below it, came back into it, not even close to constant encroachment, and then kept dumping lower. I would have put my stop loss to about, let's say, break even, and then seeing how we held this inversion order block right here, then I would have trailed it below this and left it like that, and then take profits would have been hit. And that's pretty much it for explaining take profits, exits, trailing stops, and entries. I'm just gonna go over a couple of the mistakes, the execution mistakes to avoid. So moving your stop loss too early. So for example, in this trade, this is a very good example of how you would have gotten away with that. But in other circumstances, if you move your stop loss too quick, if we take out this low and you move it already to like break even or above this fair value gap, sometimes we could trail back up and come into this fair value gap and it'll wick above it, possibly taking you out. So don't move your stop loss too quick. Definitely wait for certain structure points and prices to get broken through and close below before you start trailing your stop. Not taking partials is also another big mistake that people make. They always want to get that massive RR, but not all trades play out perfectly, especially if you move your stop loss too close or don't get the right entry point. If you enter a short in too much of a discount, then you can get a lot of pullbacks. If you enter a long in too much of a premium, then you'll get a lot of pullbacks as well. So definitely managing that is key. Also, targeting a arbitrary number like 20 pips instead of a London high, AM high, or some session high doesn't really work as well because there's no like narrative behind it. If you're just targeting if you get your entry signal and you're just targeting a 20 pip target, then it's there's no narrative behind it, and the reason for price to go up there is a lot less likely, and it's most likely will not head up there. The reason for price to head up there isn't there, like 20 pips is something like more imaginary, or if you're doing like 25, 30 pips, there's no logic behind it. So you definitely want to target something that the market is presenting you. So whatever it tells you, you target that, not whatever you want. So no arbitrary number, guys. Always target structure. Nothing like no number, guys. Okay. So exiting too early on drawdown candles. Yeah, so if you get any like big candlestick like this one, for example, against you, and in a short position, some people gets too scared and they'll just exit out. So that's something on the psychology side that I'm not going to talk about yet, but that is a big mistake that a lot of people make when they get a massive candlestick in the opposite direction, leaving them in drawdown. Definitely check your emotional states. Make sure your methodology is still intact, and no structure is broken to the upside where you're like, okay, maybe it'll target my stop now or whatever, it'll reverse. So definitely watch out for that. And yeah, that's pretty much it for this video. If you guys have any questions, don't be afraid to leave a comment down below. Next video is going to be on the AM session strategy. So basically literally just going over what I look for in the AM session, and of course the video after that's going to be the PM session, because those are the only two sessions that I trade. So yeah, that's that. Hopefully you guys understood what I was talking about today and got a lot out of it. I want you guys to practice this strategy that I've presented to you guys today, and go over some price action models with it, and get used to it. And yeah, guys, that's it for this one, guys. Peace.